Good afternoon, traders. This is Christian Farmer. It's Traffic at Trade Group, and today is Wednesday, it's the 13th, or yes, it's the 13th of September. All right, it's been a long day. A lot of things to go over in today's video, but I will keep it a short video. If I could do that, I will try to speak quickly. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Also, I mentioned this earlier in the week, but we will be rolling out a new program at Tribeca Trade Group. Right, this is going to be called the Trading Edge, and it's going to be a little bit different. So I'll have more information out about that over the weekend. We'll have a little bit of a special to start for new members, and we'll go from there. But let me get to today's price action and some of the themes of the day. Well, first of all, we have the CPI report, right? That always gets center stage, right? Everybody wants to know what's happening in terms of inflation, and a mixed report, I would say. I think that's probably the better way to explain it, because the month over month, as we talked about in yesterday's video, that 0.6 is what they were expecting for the headline number. But of course, unless you haven't been watching the markets at all, you know that energy prices, crude, has been going higher. So that's probably a good portion of that. And in fact, when you look at CPI ex food and energy month over month, so stripping out food and energy, you got 0.3 versus 0.2. So this is not a good number either, but it's not a blowout move higher. So just keep that in mind. Of course, the year over year, I don't really care too much about the year over year number because, this looking over the last year, of course, it's interesting, I guess, to talk about at cocktail parties, but in regards to like the market, we want to be looking forward, not looking back, 11 months ago or 10 months ago. So 0.3, not a great number, but the market kind of shook it off to some extent. So why did the market do that? Well, so number one, if you remember, we did sell off quite a bit into the close yesterday. So perhaps the market was anticipating a little bit of a hot number. So today the reaction, wasn't really that big. Further, and again, you could debate these things. We were talking about this in our pre-market session earlier today. Regardless of what you think about inflation or about what should be happening and what's not happening, right? What we we follow the price action, and we follow some of the macro indicators. So one of the first things that I always look at when there's an inflation data point is, did this move the expectations for interest rates? We're going to have another Fed meeting on the 20th. I think all the speakers are in a quiet period at this point. But did this start to really ratchet up, the probability that we're going to have an interest rate hike coming in September? No, it didn't. And even this morning, the first time I looked at it, and I think it was right after the number came out, there was about a 10%. So what I'm looking at is this top line here, and specifically the percentage hike or cut. So this was about 10% after that number came out, but it just kind of fizzled, and all the way into the open, it was about 4%. So right now, the market, and that's what I kind of rely on, is what the market thinks, because you just don't know what's being priced in and what's not, versus forget about people's opinions, right? So there's only a 2% chance. So if I was a betting person, I would say there's a pretty decent chance that we're not going to see an interest rate hike in November. Sorry, I'm already jumping into September. September's a different story. There's a 37% chance that they might raise interest rates another 25 basis points, but there's a lot of time before that happens, and we're going to get a lot more information. We're going to get several more CPI reports, but in any event, that should tell you something, and it should also help you understand a little bit about what the market did today, which again has just been choppy. It has not been, I'm not applauding today's price action. I'm just kind of telling you that's why we didn't have like a major, more of a knee-jerk reaction to the downside. All right, so that's what we have there. And then of course, the other things that I look at too that will tell you things is if the dollar is spiking up. Now again, this is not particularly, the trend here is not particularly good, but it didn't jump higher. This was within less than 10 basis points that the dollar went up. So again, still not, the trend does not look good here, but this didn't lunge higher. And bonds, even though they had a 30-year bond auction, slippery, but hanging on here and trying to put a hammer bar in there, at the bottom of value. This wick, the low point of the day, was at that 830 number. So for now, we are holding the lows here, but we're very close to the lows too, and for the price action of bonds. Remember, we're looking at bonds, and remember that the relationship is inverted with yields. So of course, like you could look at things like TNX2 if you want to see, the 10-year yield. But for now, like this isn't a great place of comfort, but we have not taken out those lows yet. All right, so let's get to the price action for just a bit here. Looking at what's the breadth, like I said, was not good again today. I should really have that in here. Breadth poor. Right, so that's one of the problems that we've got going on right now. And if you look at what the IWM is doing, right, this thing's starting to hang on by a thread. Very right at the 200, another test of the 200-day moving average. So and it closed right at that 200-day moving average. So again, this looks vulnerable to me. It's kind of a must watch, even though I really haven't been, I don't have any major position or anything or have a position in IWM in my trading account or in my trend portfolio. I'm trying to, I may have something like small, I probably have some small cap exposure like in my 401k or something like that, IRA, but that's it. And, I think this has been showing relative weakness for a while now, but will this break down? Watch that bottom of value 181.96. The Qs remain, very choppy. I think that right now with this market, any type of little bit of resistance that we rally into, we're getting rejected at. And again, that should tell you something, right? So, here's where we were earlier in the week. We started off the week a little bit hot. We go right into that version point of control, and then we begin to kind of fade. Yesterday, remember, and this is another thing that I wanted to mention in this video, is that this market's just very inconsistent. You will have one group outperform one day, and then that next day that group underperforms, and then we'll talk about energy. Energy had a real nice day yesterday, but basically did very close to what it did on Monday, which was underperformed. So there's just not a lot of follow through, and that makes trading very difficult for swing traders or anybody who's holding positions, just because there's if you're not selling into strength right now, you're having a very difficult time. And even selling into strength, like I got long some diamond offshore DO, right? And but so I will get to that in just a second, but I just wanted to mention here, so today's rally, where did we get capped at? Right at the top of value. So again, that's a little bit of resistance there, and boom, we go down on that. Now, again, if you look at this over the last week at this point, going back to last week, price action hasn't gone anywhere. So again, it's just it's really difficult, I think, to be trading a lot of size or anything like that, because it's really choppy. And that's what the S&P looks like too. I could show you the 1 hour chart, which is in front of you, but this is just sideways. And that's what's going on here too. We're kind of exploring a little bit of the lower side, a little bit of the upper side, but right now the price is below those short-term moving averages, and not in a position of strength. It's not in a major position of weakness either, because we're inside value for the month, but I would err more on the weakness side because we're sitting below the 50-day moving average and those short-term moving averages. So yeah, let's talk about energy first. Let's talk about a couple sectors. Then I want to talk about Amazon. I went over Amazon in yesterday's video, as well as CCJ. Those were two really nice performers for the day. But yes, this is they're not making the energy trade very easy, even though more people, I think, have been getting energy's been getting more attention, and the sentiment is getting more positive in this. But still, where the S&P was up today, right? We did finish up just barely, and the Qs were up. Energy was back down 0.75%. So it just tells you you can't go after green right now and anything, because that's the reaction. I mentioned Diamond Offshore. I held on to the remaining position here because we are into the top of value. That's 1563, but I took 2 targets, and I went over yesterday. I'm like, hey, I don't usually take, targets like this, but if you don't take targets in some of these names, this is what you're getting, and it's not just Diamond Offshore. There's a lot of names that are doing this, where they'll be up 2% one day, and then the next day they'll be down 4%, or they open up down 3 or 4%, and then they go down another 2%. So it's a really difficult market right now. Sometimes it's better to just be happy with the 2 targets and just take the trade off too. That's another strategy, which brings me to CCJ today. I put on CCJ earlier in the week, and today I'm taking it off because it's just not worth the risk, right? I love the trend here, but it's a little bit extended, and you have just because I've had so many experiences where the chart looks good, the price action looks good, and the next day the stock opens down 4%. So that's the market that we're in right now. This was a nice move, and I'm happy to take profits in this one. I mentioned I would get to Amazon, and Morgan Stanley did throw a positive note on this after hours. Amazon named top pick at Morgan Stanley. So they did this earlier in the week with Tesla. They put a overweight rating and a 175 price target. So I did get involved in this one. I was looking at this yesterday, and again, I just didn't want to add another position on with the CPI report today, but I did get involved in it today. And so nice little textbook inside day yesterday, and follow through today. That's kind of what you want to see in some names. So where could Amazon be getting to? Well, you could see that there's a virgin point of control up here at 153, but I think more importantly on the weekly chart, we're going to be hitting some resistance. Remember, this is the 80% bullish rule. Again, I think I went over this in yesterday's video. Means that 147.74 would complete the bullish 80% rule for the year, and probably will be a nice place to be taking some profits. And I will be looking to do just that. And I know that's only $3 away, but I'm happy to kind of take that, and the trend does look very strong here, and I think it's trading up after hours on that note. It is trading up about $1, which is not bad in this market. So other things that I thought, just a few other charts for today. Synopsis, while taking out this VPOC, which again, I'm worried about this being the kiss of death, but this one's just on my watch list. This is a tougher name to trade too. It's a $466 stock, but notice that it's been leaning higher. I mean, that's a real nice candle to put in for today, and that was one of the outperformers in the semis group. And if you look at the group, what outperformed today, utilities, they've been up now a number of days in a row. People will probably start to talk about the utilities, even though that they've been going up for like 5 or 6 days in a row. But I would not be getting involved here personally, because you were right at the resistance. So if you miss the rally in utilities, like, this is how I feel anyway. I missed the rally in utilities. I didn't participate. I'm not getting involved here with resistance right in front of it at 64.52, right? But that has been an outperformer, not only today, but this week. Multiple green candles there. The semis also outperform. I mentioned the semis also had a good day, but I'll tell you, this chart is not easy. I don't know what you do with this chart. Things can be green one day, red day another, if I haven't said that enough. But I think this looks more vulnerable than anything else, because it is below the short-term moving averages. It's holding the bottom of value for now, but look at it at the lower end of the that value area, and we're starting to see more things break down. Look at the industrials, right? They came down, and they actually took out this virgin point of control down here. But so you might get a bounce here in the industrials because of this virgin point of control. But what's the trend telling us right now? We're below these August lows, and that's not a pretty picture. Lower high and continuing to kind of come in a little bit. This has been one of those areas of the market that was super strong in the first half of the year. ITB home builders also look a bit sick. They could not, they tried to bounce, almost looks like the Apple chart, tried to kind of bounce here above the 50-day moving average and really got rejected. So testing those lows, but not broken through those August lows yet. Also, I mentioned breadth, right? Here's just the S&P. All of these names, and so these on the left side of your screen are the 4-week new highs. Notice what names are making new highs. Again, these are just like 1 month new highs. You got a lot of financials, right? And financials, and then you got the utilities, which we just went over. But it just goes to show you that the market seems to be moving into areas that are just unpopular, right, and beaten up, and we're getting a lot of the reversion to the mean type things. Also, bringing up for events for tomorrow, we have the PPI tomorrow, which is another gauge of inflation. We also have retail sales, and then Friday, we've got the index rebalancing plus monthly options expiration. So that could also be why financials are getting a little bit of a move this week. They're probably being reweighted up in the indices. I would think that's what the indices generally do, is that the outperformers over the last quarter, remember that it's quarterly index rebalancing. So what happens is at the end of the quarter, some of the areas that have really excelled and outperformed, they have to get sold a little bit, and the underperformers have to get bought a little bit. But same thing with this chart. Would I buy this chart here? No. With the 200-day moving average is flat. It's just really sideways. Goldman and Morgan Stanley were on the list this week of making new highs. Also Visa and MasterCard, right, which are under the financial sector. Those look pretty strong too. You could see MasterCard and Visa. But notice that you've got almost twice as many amount of names making new 4-week lows, right? On the right is all the 4-week new lows versus the 4-week new highs. So again, this is poor breadth. All right. So summary of this video, it's not much from what the my conclusion was in yesterday's video. Stay nimble. Try not to get overexposed in this market. If there's a lot of things going sideways, there's a lot of things that when they do go up, there's no follow through the next day. So just patience is in play here, because of course, I can't believe I made it through the whole video without talking about seasonality. But yes, this is the time of year that it's going to frustrate people. So, you try not to get too caught up in what's going on right now in this market, because you really don't want to get fatigued or frustrated with this, poor market seasonality. We just have to kind of get through it. All right, guys, that's the end of the video. Have a great night, everybody, and I'll see you tomorrow.